Hey everyone, welcome back to Premier Study in Investing. Great to have you. If you did not catch this, it came out March 19th. Ray Dalio gets on the horn with Bloomberg Markets and Finance, and he basically breaks down for us in about 9 minutes some of his thoughts about the interest rate increasing, some stuff that he always talks about with the kind of late term of the debt cycle. And at the end of it, watch it if you haven't because it's very good, and then maybe come back and watch this. Also, if you like Sven Carlin, Ray Dalio's big investing warning. He's talking about I don't know about dollar crashing, but Ray definitely puts it in less severe terms. But check it out; it's good. At the end of Ray's video, he basically talks about how you would want to diversify your portfolio as well as the currencies you hold. And so I was thinking, okay, well, how do you do that? So I did a little digging in since I use Schwab for my brokerage. I noticed they have something called a Schwab Global Account, and what they let you do is you can basically trade or yeah, you trade in local currency. So Australia, Belgium, Canada, Finland, France, Germany, Hong Kong, Italy, Japan, Netherlands, Norway, UK. They have the pound, the krone, the euro, the yen, the Hong Kong dollar, Canadian dollar, and the Australian dollar. So those are the available currencies. And because Ray is saying, hey, you really need to think about how are you going to do that. Now I know that you could also like hedge if you bought like some kind of currency swap or something like that on forex. I'm not at that stage yet. Like I don't know how to do that as an investor. So I just looked like quickly around. You also notice if you're interested in leaving Robinhood, like many people are, check out the links in the description. If you use my promo code or any other, if you have another friend that uses Schwab or probably any other brokerage, they'll give you money and they'll give your friend money if you join using a code from a friend or something. So both people get paid. It's basically free money. Don't leave it laying on the table. Okay, so if we go over to the Financial Times, I just want to look quickly. So the article basically says once we had the pandemic hit, this University of Cornell professor and former senior IMF International Monetary Fund official said, okay, if there's turmoil and you want safety, where do you go? You go to the dollar. So they go on, they say, well, just a few months later, however, the U.S. currency has suffered its poorest monthly performance in 10 years, hitting its lowest point against a basket of peers since 2018. So the 5% drop in the value of the dollar in July might sound modest, but the relatively stable foreign exchange market accounts as something dramatic, really. So you can see that here. This is 2020, and yeah, I mean it's definitely been lower. 2011, I remember the real estate market after the GFC kind of bottomed out around here. 2012 is when you could have got those best deals on the houses. So that was almost like 2 or 3 years after the big drops, the Morgan Stanley and like Lehman Brothers and that whole mess. So it climbed back up, and so here we are today. Okay. So let's take Ray at his words. I'm not going to say that anything. I mean I'm going to try to take his advice. So this is just the dollar maintains its dominant position. This is the world currency composition of official foreign exchange reserves, and this is from the IMF. So very reliable. I didn't want to get some kind of garbage information for you guys. IMF is very good. So the dark blue is the dollar. If you can't see this, the euro. So I was kind of went on a search like, okay, so how much money is denominated in these different currencies? How much in the dollar? How much in the euro? And then what after that? I kind of thought that was going to be one and two, but I didn't know like about the Chinese yuan or these other currencies. So next we have, they say the Chinese renminbi, and then the Japanese yen here, and then the sterling pound, and then the gray is others. Okay, so I mean that's fine. We can trade the British pound and the euro and the yen, and so I think that's going to be not a problem. So you will notice that this is from Q1 2020, and this didn't come out until the summer of 2020, so it's a little bit old, but not bad. So I went over here and I looked at this kind of because it's such a cool graphic. It says the US dollar still dominates global reserves, and it's not as recent. This is from Q1 of 2019. So yes, older, but I think it does give us a decent sense. And if we put a bunch of these together, I think we'll see it's still basically right. So 2% of world reserves are held in US dollars. Then you have the euro here, 20%. We'll just call it 20%. Then it goes to the yen, 5%. After that, we're at sterling pounds, so 4.54. Then I guess we're back up to the top here, Swiss franc 2, Chinese renminbi, 1.9, Canadian dollars, Australian dollars. So, okay, interesting. Similar thing, this is a graphic currency composition of FX reserves, so foreign FX, foreign exchange reserves. And this is from Reuters. So this comes in a Reuters article. So I felt like it was going to be legitimate. And they do an article about the U.S. dollar share of global currency reserves at its lowest point since 2013. Okay, so what we basically have here is from the bottom. I'll just read this, and you can imagine it's going from bottom to top. So the largest is the U.S. dollar, followed by the euro, followed by the yen, followed by, in yellow, other share of allocated FX reserves, and then the yuan. in this like kind of greenish color here, which is very small, but you can see it there. And then the white is sterling. So again, sterling a big one, definitely the euro a big one, of course the dollar. Dominates currently, but Ray is always talking about this. Oh, we're going to switch, the switching of the reserve currency and all the privileges that whatever country that has that, So I didn't know like how big, how much money is in, U.S. dollars. So again, similar. This is Q4 of 2018, so it's 3 months before the other graph that we just looked at. But again, 62%. This is again from the IMF. Euro about 21%. Chinese renminbi 2%. British pound 4.3. You guys can read. Yeah. Okay. So, like, I don't know how else to do it. Maybe leave us comments if there's other ways that you're diversifying away your like currency risk, especially for those of you that are maybe more into the longer term buy and hold. Ray is definitely saying that, cash is trash because. So one of the graphs that's really interesting, I'll go back to Ray's video on Bloomberg. They basically say that the inflation expectations have surged to a 12-year high. And you can see here. This would put it about 2.5%. So this is the justification behind Ray's claim that you can't hold cash. Like you can't just sit on the sidelines unless you're like really, really into capital preservation and you're waiting for this thing to kind of tank and you want to buy back in and maybe it'll cost you 2.5% or more a year. Obviously, this is climbing quite quickly. But yeah, so he says, you got to be invested somewhere, where to go. And so I'm just going to key in on what he said with the currency diversification is how he ends it. So I'm just going to jump really quickly to this graph, Peter G. Peterson Foundation. It says federal debt is projected to rise next year to the largest amount ever recorded. So debt held by the public as a percent of U.S. GDP, and basically 108% in 2021 is what they're projecting. So Ray really digs into some of the details as far as, what happens if the bonds continue to sell off, like why he just put out an article on his Perspectives like blog, or if you find him on LinkedIn, you can basically find him saying like, look, he said he wouldn't touch the 10-year bonds with a 10-foot pole. Like he doesn't want to hold bonds. No one wants to hold bonds because they're selling off and the real rates, the real returns are negative. So, if you get the 1% return and like we just saw, if expected inflation is 2.5%, 3%, I mean, obviously you're not going to make any money in that. No real gains are going to be made under that scenario. So he says, what happens if that sells off? It's going to continue to push the interest rates higher and higher, could end up in a situation of stagflation. This would be difficult on top of an already kind of, hurting workforce, stagnant workforce, talking about stagflation, stuff like this. So he says, what would really drive inflation and some of these, so the bad kind of inflation, meaning forcing the hand of the Fed to print a whole lot more money to buy a bunch of bad bonds, basically, or bonds that people don't want, they'd really have to crank up the printing. And so just going over a real quick shout out, this is the H41. Big shout out to Money GPS, definitely one of my favorite content creators. He talks about this. This is the Federal Reserve Fed balance sheet. And I just noted this. So this column here is, it looks at the change since March 18th of 2020, and this is March 10th of 2021. So this number here will kind of give us how much they've added since a year ago. And so currently we're at 7.7 trillion, and in the last year they've added $3.17 trillion. And so that's why you see some of these thumbnails coming up from people that say, wow, so much money of all US dollars that ever existed, like came into existence in the last 12 months, so like 40% or whatever of all dollars are only 12 months old, something like this, And so, people estimating that the balance sheet could just continue to skyrocket. What are you going to do? What are you going to do? You're not going to hold bonds. Most people say you're not going to hold bonds. You could get into gold, and some people are talking about that. Maybe it's manipulated. I don't know. I haven't gotten that far as an investor. I hold a lot of gold. You could gamble with, penny stocks or these other things. Ray really says you need to diversify your portfolio. Remember that a lot of people are saying value, especially emerging market value, might be a good sector, especially if you can get into some other currencies. And I just thought Schwab was really interesting as a way to do that. Again, they call it their Schwab Global Account. So that's what I have. That's probably what I'm going to do. I sent in the paperwork. It's you print a form and you basically send it in. It's easy if you already have a Schwab account. You need to just send in a little bit extra paperwork. If you don't, check out the referral link below. And then definitely, like I said, go check out this from Ray. It's only like 9 minutes long. And then Sven Carlin does this bigger breakdown. I haven't watched it, but I like him as well. He puts a lot of work into his videos. So that's what I have for you. Thanks so much.